Volatility in global markets continued to keep investors on edge. While U.S. stocks posted the best week of 2025, Asian stocks slid as the currencies depreciated against a rising dollar. Our next report telling you more.
As investors tracked Trump's inauguration on January 20th, U.S. stocks ended the week on a high note. All three major indices notched their first weekly gains of 2025. The Dow rose 3.7% for the week, showing its best week since the November 2024 U.S. election. The rally followed shorter than expected inflation data, including a mild rise in the core consumer price index and producer price index, reigniting hopes for interest rate cuts from the Federal Reserve. European markets closed in positive territory on Friday, with London's FTSE 100 hitting a record high. Positive earnings from several firms and expectations of easing monetary policy supported the markets. However, some investors remained cautious amid continued political uncertainty and inflationary pressures in the Eurozone, where economic growth remains fragile. In Asia, markets showed a mixed performance on Friday. China's CSI 300 gained after fresh data showed China's GDP grew 5% in 2024. With a stronger than expected fourth quarter boosted by retail sales and industrial output. However, Indian markets continue to slide as earnings from big tech firms and financial firms disappointed investors. In the commodities market, oil prices dipped on Friday but secured their fourth straight weekly gain. Brent crude settled above $80 a barrel while US oil trades around $78. Supply disruptions fueled by new US sanctions on Russian oil producers and tankers provided upward momentum. Experts suggest a potential demand recovery aided by expectations of US interest rate cuts could further support oil prices in the near term. Gold prices eased slightly on Friday. However, gold logged its third consecutive weekly gain, bolstered by easing inflation in the US and expectations for monetary policy easing. In the following week, investors will closely watch Donald Trump's second-term inauguration and potential policy announcements, alongside US housing and inflation data. Key developments in the oil market and China's economic policy will also set the tone for the weeks ahead. Bureau Report, WION World is One.
And well, for more on this, we are now being joined by Dr. Andrew Ferries. He is the CEO of Ecogonosis Advisory. He is joining us live from Uruguay. Welcome to WION.
Delighted to be here.
First up, I want to ask you that what impact could Trump's policies have on equity markets and investors' sentiment in the short term?
Oh God, this is a booming industry in my side of the profession, and the overwhelming majority of the staff has absolutely zero value added. So I'm afraid I'm going to give you a little bit of blah, blah, okay, because everybody says the same thing. I've got a completely different view of that, but the expectation is that initially there's going to be a boost on the equities because he has a lot of friends, particularly on the technology side, and then the reality will dawn in, particularly when tariffs are imposed, and that accelerates inflation. Now, my position is very, very simple, and it is unrelated to Mr. Trump. That is that the Fed is not, read my lips, the Fed is not going to cut interest rates for possibly the first half of the year. And that is going to be a reality which is unconnected to politics because it is driven by the fact that inflation in the United States is not coming down. And given that the possibility of Trump imposing tariffs is going to boost inflation, the Fed will be a little bit crazy to commit suicide and begin to cut interest rates at the time that inflation is accelerating. The economy is not doing badly. The labor markets are basically okay. We had some good numbers out of the November sales, but cutting interest rates is not going to be there, and that is going to have I would say immediate, but it will have a lingering impact on equities. So Trump's accession to the throne, okay, is going to be a little bit irrelevant, given that my belief is that Fed is going to spoil the party.
Right, Mr. Ferries, you did touch upon the rate cuts. Just to follow up on that, do you expect U.S. rate cuts to further strengthen global equity and commodity markets?
No. Okay, the Fed is not going to cut interest rates. Okay, I have explained to you in detail why. The answer is no.
My last question to you, how sustainable is the recent rally in European and US stocks given geopolitical and inflationary risks?
Sorry, this is also, look, we're looking at the same numbers. I'm not giving you a forecast. Okay, the idea that there was a sustained rally at the beginning of the year is just not true. Okay, the only two stock indexes that have got plus year to date is S&P and the Euro. And then take a deep breath. In Asia, the Sensex, Malaysia, Thailand, Jakarta, Nikkei, Hansen Index, and the China CSI, all of them are down year to date in US dollar terms. So I'm sorry, we're not looking at a burst in equity activities. We're not.
Right, Mr. Freris, thank you so much for joining us on World Business Watch with your insights.
It's a pleasure.